With only 26 days to go till we tuck into some turkey, are the settings right for a Santa Claus rally? Will commodity prices crash Christmas? And what could a looming Fed rate rise do? My next guest needs no introduction. He's the one and only Peter Switzer, direct from Abu Dhabi, joined by his partner in crime, Paul Rickard, to talk markets, Santa Claus rally, stocks and much more. Gents, welcome to the show.
Great to be here.
Thanks, Marty.
Thanks, Paul. Peter, how's the Grand Prix, mate?
It was a fantastic experience. You've got to remember, Abu Dhabi is the 8th biggest oil producer in the world, so they're going through tough times because of the oil price, but you wouldn't know it. This is a place that's growing at a rate of knots. As I walked around, saw so many buildings and cranes. I know Paul's a great crane watcher when it comes to economic growth. Heaps of them here, and part of the reason is that because they are oil producers, they've been smart enough to diversify. I must admit, I have thought, why are iron ore prices so low when they're building so much stuff in Abu Dhabi? The Grand Prix is a great event. That's a great example of diversification. And there were some pretty impressive people over here as well, from CEOs locally like John Borghetti from Virgin, James Warburton from the V8 Supercars, Tony Shepherd, of course, the Commissioner of Audit guy, Robert Thompson. I met Robert Thompson, who's the CEO of News Corp, a pretty powerful operator. And he's aware of the Switzer program. I was very happy about that.
Good to hear. So, first question, you wrote a great article in the Switzer Super Report. Second question, I should say, where you spoke about whether or not commodity prices will crash Christmas. What are your thoughts on that? What do you think the Fed's is going to do? And do you think we'll get the Santa Claus rally?
Okay, well, let's do the commodities first. It really worries me. I think commodities are a worry in the short term. I think in the long term, in my article in the Switzer Super Report, I put together a pretty reasonable argument to, buy a stock like BHP. As long as you're prepared to wait, 1, 2 years, maybe even 3, you're still going to get a good return on the kind of price you're seeing now. I know there's a pretty negative report from Citi out there on Vale, which of course is one of BHP's great rivals. I think they're going to have some tough times because of the dam collapse as well. But my view is, I've talked about this with Paul before, that I think there's 3 E's that will determine what we see at Christmas time. And that, of course, is economics, earnings and expectations. Well, expectations are really mixed. There's a bit of negativity around. I loved what I saw locally today, Marty, with the fact that business credit's now growing at the fastest in 6.5 years. Yep. And I think profits are up for the first time in 5 quarters. So you've got some earnings there, you've got some economic. I hope then that the December rate increase, which we expect in the USA, leads to a positive reaction. And if that happens, well, I've always argued we need a shock shaker, a positive shock shaker to turn the whole sentiment around. And I'm hoping that maybe the European Central Bank this week also does something to help expectations. So it's going to be a very interesting 16 days until the 16th of December when the Fed raises interest rates.
Paul, what are your thoughts on what's happening in global markets right now?
Look, I think Peter's sort of partly right. As always, me and Peter are going to disagree a little bit. But look, at the moment, I think, the market in the offshore looks pretty good. I think Australia's a slightly different position. But just taking that forward, Marty, the US dollar, if it continues to rally into the expected, the Fed rate hike on the 15th of December, well, maybe the US dollar might start to look a bit toppish, and then if the US dollar falls a little bit, we could actually get a pickup from commodity prices. So a lot of the weakness in commodity prices has been, as Michael was saying previously, about the strength of the US dollar. Look, everyone's buying the US dollar, but, sometimes it's a case of buy the rumour, sell the fact. Let's just see what happens post the 15th, 16th of December. So I'm probably with Pete in that grounds. I think the US market looks good. I'd like to see the Australian market a little more strength locally, but I dare say we're not going to set our own direction anyhow. So if the US market goes up, we'll probably follow, but it'll be a struggle.
Yeah. So, Pete, it's been a tough year for investors now. If we take out dividends, it's still been a tough year. What have you seen as the major headwinds, and what's your view what's going to happen in 2016?
Oh, without doubt, commodity prices are the critical one. I think our banks were overslugged following the Murray inquiry, and I hope the people who watch our program have been wise enough to get on board with the bank stocks as they recover from their lows we saw a few weeks ago. But, yeah, I think commodity price is going to be a very interesting part of the story. I totally agree with Paul and Michael Knox on the currency issue. Part of the commodities problem is the fact that the US dollar is so high. And I made that point in that article today that, you know, if, for example, you bought BHP at 20 rather than the $18 we've seen recently, even if you bought 20 and it gets up to 22, there's $2 on 20. That's a 10% return. Showing the dividend as well, which after tax is over 10%, it seems like a no-brainer. And I think if currencies go the way Paul was suggesting and also Michael Knox, well, then we might get that little return on commodities. And this is an important point. I made it with Michael Hefner last week. BHP doesn't have to do fantastically well for our market to go up. It just doesn't need to fall any further than where it is now. If it can hang around the 20s or so, the other stocks can push the index up. But I'm not expecting a sensational rebound in the stock market. But I'd love to see the US, breed a Santa Claus rally. That economic data today, I'll be interested to see what economic growth brings us on Wednesday. And putting it all together, I think there will be some slight Christmas cheer. If it doesn't come in December, it'll come in January. So Santa Claus could be late, but he will come.
Paul, how are you investing in this low growth environment? You know, what sectors and stocks are you looking at right now? Where do you see value?
Look, I still think there's a bit of value in the banks. Look, they've been beaten up pretty badly, but interesting for the last couple of weeks we've started to see people come back into that part of the market because I don't think they're seeing much other value. Obviously everyone wants to find the growth stocks, and so we've got companies like, CSL trading over $100 today. You've had huge support for some of the so-called industrials that are growing. I'm just not sure there's a lot of value left in that part of the market, but people are piling in. It's anything sort of but top 20 at the moment. I think you've got to, in that sort of being a little bit contrarian, you've got to take a bit of pain in that part of the market. So I think the banks do look okay. I think there is some opportunity still for the long-term investor in a company like BHP. I think it's pain in the short term.
Is it time to buy now?
Well, $18 and I think 9 cents is where they closed tonight. So down another almost 4% today. Commodity prices weak. Who knows how much damages they're going to end up paying in Brazil. That'll pan out over years. I mean, and we won't know what insurance is going to cover. I guess that if you bought at $20 like me and you're now seeing at $18, you say, well, it's probably time to buy a little bit more. But until the commodity cycle turns, I don't think there's going to be a lot of friends for BHP. But I think 3-5 years down the track, as Peter has said already, I think there's great value there. So you've got to be prepared to wear some pain and stick with it.
Now, you wrote a pretty scathing article about some of the leadership at BHP. Do you think a change is required for the stock to improve?
Look, I think it would help. I mean, the leadership I'm talking about is more the board at board level. Yeah. I think the new CEO is fairly new in the job. But I think BHP should come clean, abandon its progressive dividend policy, take that off the agenda, make the obvious excuse everyone knows, commodity prices are this low, they can't afford it, and if Samarco is going to cost billions of dollars, we can't have a progressive dividend. That would actually help the stock just to come clean about it. But I think it's this position of being, we'd still like to do it, but, we're actually sort of saying nothing. I think it would help, and a few changes to the board probably wouldn't go astray, Marty. I mean, Jack Nass has been in the job for almost 6 years. A lot of things have happened at BHP. I think the record is not particularly impressive.
Pete, moving to another stock, Woolworths, what are your thoughts on that at the moment? That's obviously been beaten up pretty badly, down about 35%. What's your thoughts on where Woolworths are in light of the new management, the new changes they've made at board level?
Yeah, look, some people like the idea that Roger Corbett's come as an advisor, and my initial reaction, yes, that's a good idea. But I want to see the CEO, and the argument has to be whoever takes over is not going to just say, oh, yeah, we'll try and make this work. He or she is going to sell stuff. They're going to take some pain. And I think the shareholders will have to go along for the ride. But I do believe the brand itself is a great brand. It's just been mismanaged. They haven't had leadership of the calibre of Wesfarmers like Richard Goyder. It will come back. But, there's also the talk that, Walmart is out there hovering, waiting for an opportunity. They may move on the stock. Once a few of the, say, big W's sold off and Masters might be dumped, and then you've got the supermarket and Dan Murphy's pretty good assets, and that's when the hovers might come in. And so I think, once again, if you're hanging in there, you'll probably get a return down the track. But like BHP, there could be a bit of a wait before the good stuff comes.
Paul, your thoughts on Woolworths?
I think it's a little bit early to jump in. Look, I think Peter's articulated all the issues. I think you've got to watch the shorts, Marty, and the shorts are still there in Woolworths. The data today out from ASIC says that as last Tuesday, still over 9% of the shares are short sold. Now, unfortunately, the data takes 3 days to get to us, so I think that's an issue for ASIC about how it reports short selling. But we're looking at last Tuesday's trade data. The shorts, as of yet, haven't covered. Look, they've been so right with a firm like Slater and Gordon and many others that have got really bashed up. I think that until the professional money says Woolworths has bottomed, I think it's too early, because I can't see that management's done much yet. Okay, a couple of changes on board level, and an advisor in Mr. Corbett, but.
You think that's a positive for the company?
Look, it can't do any harm. I mean, Woolworths recognising the problems is a good start, but there are some big challenges there, and we've got to get through the appointment of new CEO, and when he or she takes over, see what their strategy is going to be. So I wouldn't be rushing into Woolworths just yet.
Peter, Fed rate rise. Could anything stop it? A bad employment number on Friday.
Yeah, the jobs report on Friday is going to be a really interesting one. I'm really hoping it's a great report like the last one, which was a jobs report on steroids, driven by Arnold Schwarzenegger. Was so good. I'd love to see another one. We've seen that Black Friday wasn't great for retail, but the only reason there is everyone's buying online. Like, who hasn't got a partner, a wife, a girlfriend who's buying stuff online left, right and centre? So retail shops are always going to do 10% down, in fact, the Black Friday sales, I reckon, so far. But I do think the American economy is one of the shining lights out there. I just love to see another great job number and then roll into the December 16 with a small rate rise, with the Fed boss, Janet Yellen, saying, well, we don't increase, but we'll increase at a very slow rate, and let's just see Wall Street take off and have a big impact on our market as well. That's what I'm praying for, Marty, while I'm traipsing around Europe after Abu Dhabi.
Well, have a great time. We'll leave it there. Peter, Paul, thanks for your time.
Thanks, Marty.
Cheers, mate.
After the break, we'll talk to the leaders of a global organisation for entrepreneurs. Don't go away.